Ladies and gentlemen, welcome back to Data Dispatch. I hope you guys are having a wonderful day. We're going to be talking about everything that happened in the market, all the important updates you need, and what can be happening tomorrow because we have a big piece of macroeconomic data. Of course, with Palantir Technologies, we see a little bit of consolidation today, down slightly in the red, sitting at that 37 still, looking fairly healthy. We're going to be talking about recent price target actually increases and things that we could be expecting over the next few weeks. On top of that, we do have a very big piece of inflationary data that will be released tomorrow. That is the PCE data that the Fed utilizes as a key component to kind of determine the way inflation is going. And this will continue the whole prospect of what's going to be happening with interest rates, which has a large effect on the market. We're also going to be talking about Schwab making a big change to a lot of their ETFs and what's happening across the globe right now, especially with China that is bringing stimulus to their economy, trying to bring it up. If you are a new or returning viewer, hit that like button, subscribe for daily videos, and of course, I'm not a financial advisor. I'm collecting all the data, and you guys already know, dispatching it to you. Now, pop it up here, Palantir, closing here at 37.10. Like I said, holding in the high 30s, I think this is incredibly bullish. Even though we're not seeing a ton of price movement right now, consolidation and cooling off is really important, especially for a stock that's gained a lot of market capitalization in just the previous few months. And basically from year to date, up over 100%, doing very well. Now, where PLTR sits in terms of trading volume at about 50 million, that's what we're typically seeing. Toggling over here quickly to the options activity for next week, we're seeing kind of a mix between calls and puts in terms of volume coming in here. This could largely be due to the fact that a lot of investors are waiting for that PCE data to be released tomorrow. Now, what's going on with Palantir stock? Let's talk about one of the big things that we did see. Dan Ives, who's usually been bullish on PLTR, came out yesterday maintaining an outperform rating on Palantir and actually lifted the price target for the stock from 38 to 45. Now, this does not align with what a lot of different investors are trying to basically estimate in terms of the price targets. The 12-month forecast right now is actually in about the mid to high 20s, and Dan Ives keeps increasing it. But the reason behind is because he is contributing his price target to the recent growth in size and the number of contracts for the company's AIP platform. Basically saying that PLTR is firing on all cylinders around the market, and with AIP being involved, believing that this is a valuation changer for they say here, the Messiah of AI heading into 2025, which will be interesting to see where Palantir is in just a few years. One interesting Twitter thread that I wanted to talk about here from Jack Prescott, talking about here Palantir becoming the operating system of the government and enterprise AI applications and what this can really mean, especially with their AIP Now service and really how this correlates to how we can relate to it. This is basically a position to become the app store of enterprise AI. And what these solutions basically do, allow customers to rapidly deploy these tools within their existing operations. Now, this is a design here, he says, out of the box, similar to apps on the App Store. Coming here in pre-configured capabilities that can be utilized within the Palantir platform. And AIP Now solutions, they include, but are not limited to, all these different sectors here. You can see customer service, finance, human resources, operations, many, many different types of services within a whole slew of different businesses. So this AIP Now basically is like an app store for how do you want to incorporate AIP into your specific business for a specific need and a goal to help improve productivity, efficiency, and of course, reducing waste. So being one of the first movers here is risky, of course, but we've seen it play off and be rewarding for Palantir, and especially for their investors that have been holding on for a long time. And that leads into, where will Palantir be in the next 3 years? We don't know, but looking at compounded annual growth rates, looking at different types of cash flow models, we've seen you can run all the models and all these different analytics, blah, blah, blah. I don't like to really pay attention to a lot of algorithmic models. more looking at what's happening in reality. And that's what I want to report to you guys on a daily basis. We've seen sales that have really been, increasingly growing quarter over quarter. We've seen this year over year, and earnings have been always pretty well for the last even 6 quarters for PLTR. And the move right here is, as you can see, paying off. One of the big things that I agree with is that the potential growth story for Palantir is still very lucrative. And that is because there's an estimated $1 trillion in artificial intelligence spending across the board in the next 5 years. That's what Goldman Sachs is estimating. So any type of stock that's involved with AI, a big competitor with an AI, and Palantir falls right into that pile. I would say a leading competitor in AI, especially in the SaaS industry. That is where you can see market capitalization trickling into these stocks. And if Palantir is going to continue to being a leader, I only see, my own opinion, price accumulation from there on out. Of course, there's going to be bumps in the road. There's going to be sell-offs. There's going to be run-ups. But on a trend line, picturing here, in the next few years, what do you guys think? Leave it down in the description. Now, or in the comments. With the stock market, what's happening today? We have the S&P 500 closing at record highs, continuing to do very well. We see a lot of buying pressure that is continuing to come into the broader market. You can see a lot of green across the board. You got the S&P up about 0.4%, NASDAQ up about 0.6%. China right here is pledges on more stimulus. They're trying to revive their economy. And this has led to a positive transition to buying pressure and momentum into the broader market. That's what we're seeing right now. Also, you have here the quarter GDP. They beat Wall Street expectations, showing signs of the economy doing well, while the weekly jobless claims unexpectedly fell to the lowest levels in the last 4 months. So the economy is showing signs of some resilience. Now, on top of the stimulus that is coming in, one of the big things that I think is going to have more attention onto it is the highly anticipated reading of the Personal Consumption Expenditures Index, the PCE data. Big inflationary data metric for the Fed, and that is going to be a big indicator on what could be happening with the direction of interest rates in terms of federal funds rates for the next month. Now, Schwab, big things coming here. They have decided to split their shares for 2/3 of the ETF lineup. This is a pretty big decision. And Schwab's management is splitting their shares on 2/3 of the 33 different types of ETFs that they have in the market, aiming to stimulate sales with a lower share price. So just trying to bring attraction by purchasing shares at a lower price. This is kind of just a psychology that falls behind stock splits. We've seen that. And one of the big ETFs for Schwab is SCHD. This is their dividend equity ETF. We've heard about this. A lot of people talk about this for good passive dividend income, trying to get a big dividend portfolio. The split ratio for that is 3-for-1. And you can see here, even their large cap growth ETF is going for a 4-for-1 split ratio. Well, some of the other ones are going for a 2-for-1 split ratio right here. But interesting to see Schwab coming out of here talking about trying to lower their share prices to help increase attractiveness from financial advisors that are managing different types of portfolios and retail investors by reducing the net asset values through the share splits. NVIDIA, volatile month that we've seen, has been climbing up about $124. We've seen NVIDIA gaining about more than 3% in the early trading, and then we see a little bit of volatility in terms of selling pressure later in the afternoon. However, we're seeing the start of the week are back in the green for September, and the overall market is continuing to correlate with this. We know NVIDIA does have a heavy weight on the broader market, and this could be a flip in what we've historically seen in terms of patterns. Typically, historically, September has not been a good month for the S&P 500 and the market overall. We're not seeing that in this month's market. And I think one of the biggest contributors to that is NVIDIA's recovery that we've seen here, and also the 50 basis point federal funds rate that a lot of investors expected just a 25 basis point cut. So NVIDIA has been doing a great job. You can see here since the beginning of the month at about $100, coming up to 124 now, doing well with a total market capitalization of over $3 trillion. So big things happening there, helping to bring up the broader market. And we're seeing the chip maker shares having the year's second best performers in the S&P 500. So you also have Micron earnings providing a good early boost. What do you think is going to be happening with the PCE data tomorrow? Let me know down in the comments. Do you think we're going to see good inflationary numbers? And by good, I mean showing signs of cooling that is continuing. Or do you think we're going to see it not basically cooling as much as we were expected? I'll catch you guys later. Peace out and take care.